Everybody seems to be investing in the US markets these days. It offers you the best tech companies like an NVIDIA to invest in. US is a strong currency. It gives you a great hedge against the INR. If you have longer term financial goals like a kid's education in the US, then it makes sense to start saving and investing in that currency. And these are all great reasons to be investing in it. But there is one aspect that a lot of people don't know about. It's called estate tax. Yes, estate tax can wipe out 40% of all of your investments and savings that are in the US markets after you pass away. Needless to say, this has huge implications on your loved ones. It can wipe out all of your financial planning that you've done while you were alive and leaving your family with a little bit of a messy situation to deal with. If you're new to the channel, I'm Pranay. I work in Google myself, and that's why I'm making this video, because a lot of my family savings are actually in the US markets. This channel is brought to you by the 01 Media Network by Zerodha. With their support, I'll be helping you spend your money wisely. In today's video, I'm going to be walking you through a few things. One, what is estate tax? Two, what are the different tax slabs? We'll go through what are the implications on this for you. Three, we are going to talk about some instruments that you can actually invest in and circumvent the estate tax. And four, I'll actually show you a live brokerage terminal with those instruments and how those can be traded to give you the benefit of US diversification and yet not having to pay estate tax, right? So if you know somebody who works at a US tech company or US company that gives stock options, please share this video with them. It can be in India, it can be in Singapore, Dublin, London, anywhere. This is not an India only tax. It's for any non-resident American across the world. So please share it with them too. If you know of people who might not be working at a US tech company but have a large percentage of their portfolio in the USD, then please share this video with them as well. Like I said, probably has life-changing implications, and I want to ensure that this video reaches far and wide. So yeah, with that, let's jump in. Jumping into question number one, what is the US estate tax? I think two things to note. This is not an income tax. This is a tax which is applied after your death, and therefore it's different from the income tax. Two, it is not a state tax, it is a federal tax, which means it's applied by the central government and not state governments, right? Now, the way this is calculated is that first, the government computes your gross estate. What is the gross estate? Let's understand that. In order to compute the gross estate, you need to understand the concept of U.S. Situs. Situs means S-I-T-U-S. It basically is another word for situated. So where are these assets situated? If they are situated in the US, then they are a part of your gross estate, and therefore the estate tax will be applicable on them. If they're not situated in the US, then they are not going to be applicable to estate tax. There's a long list of assets that fall under US Situs, but I'll cover a few which I think are the most common ones and most relevant to the viewers of this channel. The number one is US real estate. US real estate is nothing but any real estate which is situated in the US, physically located in the US, will count under US Situs. Number two is tangible personal property in the US. So say, for example, you have a locker in the US where you have some jewelry lying, or like some luxury watches lying, or whatever else, or cash also for that matter, which is lying there. That will be counted under US Situs, and therefore you'll have to pay a state tax on it. Number three, most important, stock units of US incorporated companies. So say, for example, if you are working at a Microsoft, you get stock units. Microsoft is a company which has been incorporated in the US, and therefore all of those stock units will fall under US Situs, and you have to pay a state tax on them. Similarly, let's take an example of a mutual fund or an ETF. A very common ETF is VWRA, which is the Vanguard S&P 500 index, which is an ETF which invests in the top 500 companies in the US. This ETF is actually domiciled in the US, and therefore it is a part of the US Situs, and estate tax will have to be paid on it. Similarly, QQQ, which is another ETF which invests in the NASDAQ 100 companies, again falls under US Situs and will have to be paid tax on. I'll take another example. There's another ETF called KWEB, KWEB, which invests in Chinese companies but is domiciled in the US. So while the underlying companies are not American, but because the ETF itself is domiciled in the US, it is counted under US Situs, and you have to pay a estate tax on that as well. So that's on the US companies and mutual funds and ETFs that are counted in this. Last is cash, which is held in your US brokerage account. So say, for example, you have an Interactive Brokers account and you have some cash lying there in that brokerage account. That is also counted under US Situs, and you have to pay tax on it. One funny thing is that if you have a bank account and there's cash in that bank account, that is not counted as US Situs, but cash in brokerage account is counted in US Situs. I don't know the reason. This is what I read. It's strange, but I thought I'll share. So that's what it is. All of us are NRAs, which means non-resident aliens, which means that we are neither green card holders, nor are we citizens, nor do we spend a certain number of minimum days in the US to be counted as not NRAs. So because all of us are NRAs, we could be in any country, India, Singapore, London, Dublin, wherever. And as a result of which, we all fall under the US estate tax purview. Now let's jump into what are the assets which are generally not considered in the US estate tax. Okay. First, real estate, which is located outside the US. So if you have a house in India, it is not a part of the gross estate that the US will take into account, and therefore you do not need to pay estate tax on it. Number two, stocks in foreign corporations. If you own stocks in Adani or Ambani or Ultratech or whatever else, right? They will not be, because those companies are not incorporated in the US. They are Indian companies, and therefore you will not be eligible. You will not be required to pay a state tax on all of those stocks. Similarly, on ETFs, if there are certain ETFs that could be investing in the US companies but are not domiciled in the US, then even they do not count under US estate tax. For example, your Motilal Oswal Nasdaq 100 fund of fund, even though it is investing in the US companies, it is not a part of the US estate tax because it is domiciled in India by Motilal Oswal, right? So that's an important distinction to make. We will cover this in more depth in the next section. So hold your horses, do not go and start investing in Motilal Oswal just because I mentioned it here. We'll cover this in more detail in the next section. Third is life insurance proceeds. If you are an NRA, which is a non-resident alien, and you pass away and your family gets life insurance proceeds, they are not counted as a part of your estate, even if the company is a US insurance company. So for example, Tata has tied up with AIG. AIG is American Insurance Group. Even if you get a claim from, because it's a US insurance company and they give you a life insurance settlement, it is not going to be counted in your estate, and so you don't need to pay estate tax on it. This will have implications on how we can circumvent it, and we'll cover that in the next section. The fourth one is ADRs. ADRs means American Depository Receipts. This is basically, let's take it with an example, LVMH, which is a company which is incorporated in France, but because it is also, the ADR of that company is also traded in the US markets, and therefore it is not counted under US Situs, and you do not need to pay estate tax on it. So those are the top four asset classes that you do not need to pay estate tax on. Cool. So now that we've understood what is a part of US Situs and what is not a part of the US Situs, let's actually get into computation of this US estate tax. It's a slightly complex slab mechanism. There are a whole different set of slabs that are there. I will compute some live examples for you. I've built an Excel sheet for you, which I will share. Link is in the description. If you want that Excel sheet, you can take it. I will also walk you through it right now. But the idea is that you input your gross estate, and the exact tax amount will appear in front of you with the blended tax rate that you're paying across different slabs, right? So let's jump into the Excel. Let's take a look at it. If you want this Excel, just click on the link in description or on the pinned comment and I will send it to you. It's free. Okay, so let's see. These are the different income tax slabs that we have here. The total income I will show you in a minute, but these are the different slabs, right? $0 to $60,000 of your gross estate, the tax rate is 0. This is important to note because, again, this is discrimination of sorts, right? Where NRAs, non-resident aliens, have a limit of only $60,000, but the limit for Americans who are not NRAs, so if you're a green card or if you're actually working there or if you have, a citizenship there, this limit is not 60,000, it is 13 million. That is almost 200 times more, right? So it's just extremely, extremely disfavorable to NRAs. So if your estate is above $60,000, which is broadly 50 lakh rupees, you will need to pay estate tax, right? So let's see, 0 to 60,000, 0%, 60 to 70,000, 18%, and then every $20,000 there's an increment, and then that becomes $50,000, and it catches up pretty fast. The highest is if your gross estate is over $1 million, then it's about 40%. And if I expand these, basically, if you see your total income, this is the yellow cell is the input. So if, say, for example, your total, this is not income, this is total gross estate. If your total gross estate is, say, 150K, right, which is broadly about 1 CR, then your tax amount for the first 60,000 is obviously 0. After that, it becomes 1,800 and so on. And finally, your tax is about $21,000, which is almost 14%, right? So 14% of your 1 crore is what you'll have to pay as tax, estate tax. Similarly, if we increase this to, say, 500K, which is $500,000, your tax goes up to almost 135K, right? And your blended tax becomes 27%. If I were to make this $1 million, which by the way is not unprecedented. There are a lot of old-time employees of these US stock companies whose stock units are in this ballpark, right? Like you could look at NVIDIA employees. So this is not unprecedented. This is actually quite commonplace for old-time employees in US stocks who've accumulated stock options over the past couple of years, decades, and then with the bull run, these stocks have become worth this much. If you are at $1 million, you are going to be paying 322,000 in estate tax, which is a huge 32% blended tax rate, right? So this should give you an idea on how important this is to plan for estate tax and to make sure that we have our safeguards in place. Otherwise, this becomes a huge challenge for your family and like really derail your financial planning that you've done while you were alive. Okay, now what? Now that you understood how much are you going to get taxed, let's also understand that what should you do and how can you avoid these estate taxes, right? So if you go back to the earlier part of the video, we had spoken about non-US Situs or US Situs, right? Now, US Situs means that anything which is situated or domiciled in the US. What if you were to find an ETF that invests in the underlying US stocks, but is domiciled in a country that has no estate tax? There are a lot of such countries. India is actually one such country where there is no estate inheritance tax as such. And therefore, Motilal Oswal, NASDAQ 100 future fund of funds could be one option. Should you invest in that? My personal opinion is no, because as you know, RBI has a $7 billion remittance limit that all of these mutual funds have hit now, and therefore they're actually not able to invest and remit money abroad and invest in these markets. And so there is a difference in the actual underlying NAV versus the NAV in the market because of the premium that is being associated with this. And therefore, I would not recommend investing in these mutual funds, right? Especially in India because of the RBI limit. So what do you do? There are other markets. There are other countries where there is no estate tax. And there are ETFs which are from reputed AMCs which you can invest in. So two such countries, Ireland and Luxembourg, these are the countries where you should be investing in and investing in their ETFs which are domiciled in these countries. I will give you some examples of certain big indexes that you could do. Let's look at the three indexes. The three indexes, the first one is S&P 500. The US domiciled version of S&P 500 is WU, which is the Vanguard, which is the name of the AMC, and Vanguard S&P 500 index, WU, VWRA is the ticker symbol. For the US domicile, which is eligible for estate tax. You should not be investing in that. Instead, you should be investing in CSPX. CSPX, what is CSPX, you ask? A quick Google search will show you. CSPX is iShares' S&P 500 index, which is domiciled in Ireland. And they invest in the S&P 500 companies, but from Ireland, and therefore, they are not eligible for a estate tax, and that's something you could invest in for S&P 500. Next, you'll ask me that, hey, I don't want to invest in S&P 500. Say I want to invest in NASDAQ 100. Now, NASDAQ 100 has, and these are just examples. You'll have to do your own research depending on exact ETF, which one do you want to invest in. I'm just going to take the top three examples, but the most common ones. So NASDAQ 100, there is QQQ, which is the most popular, or QQQM. Again, these are Invesco is the AMC asset management company, and then they're domiciled in the US, and this invests in the NASDAQ 100 companies. The version for this outside the US in Ireland, there is this ETF called CSNDX. Again, the expense ratio of this is slightly higher than QQQ. It's at about 0.3%. But again, because this is domiciled in Ireland, you will not face a state tax on this. The AMC for this is iShares, so it is a reputed AMC, and you can consider this if you want to invest in NASDAQ 100. So the third index, we've covered S&P 500, we covered NASDAQ 100. Now let's get to the third one, which is FTSE All World Index. The US domiciled version of this index is this ETF called VT, which is Vanguard's US domicile that invests in these all world companies, is all the companies of the world. But if you were to look for an Ireland domicile, then there is one called VWRA. Again, Vanguard is the key AMC here. And this is domiciled in Ireland. And therefore, you don't need to pay estate tax on this particular ETF, right? So you could potentially explore these alternatives to the US domiciled ones in order to save estate tax. These are just three placeholder examples. If there are specific ETFs, if there are specific indexes that you want to invest in, then just do your research, find Irish domiciled versions of the same ETFs because there are lots of them, and use those to be investing, or Luxembourg, right? I've just shared three examples with you. You'll have the next question. Hey, Pranay, can I invest in these ETFs using my existing brokerages, or do I need to find new brokerages? Now, there is a mixed answer to this. I was actually looking for some of these ETFs on These are, by the way, called UCITS, UCITS. I will not get into the full form of this, but Google UCITS. It's the type of an instrument this is. But I was looking at different portals. I looked at Interactive Brokers, India NXGA, and Vested. Good news is that India NXG and Interactive Brokers have all of these ETFs. The three ETFs that I spoke about are listed on these. On you can trade them from Interactive Brokers and India NXG. On Vested, it's not available. So that's a bummer. I'll show you. This is what the Vested page looks like. So if you look at my screen, I will look for CSPX, for example. It says not on platform. Similarly, if I were to look for VWRA, again not on platform. And the third one was, what was the third one? Third one is, see, these are all UCITS. Now, the third one is SXRV. SXRV, even that is not on platform. So Vested doesn't seem to have it. I don't have an IND Money account. But given IND Money, Vested both have Drive Wealth in the background as their broker, my hypothesis is that even IND Money won't have these Irish domiciled ETFs as a part of them. And so you'll have to find another solution, either open an account in IBKR or in India NXG, or find some other broker that allows you to do this. Now let's look at our other platform. This is India NXGA. CSPX is actually listed here. iShares Core S&P 500, it's right here. Okay, so CSPX is available. Now let's look for the next one, VWRA. And as you can see, this is also here, Vanguard FTSE All World Index. You click on this stock, and this is VWRA being traded in. And the other thing I want to call out is these are traded in USD only. It's not like you're now trading in another currency. They are listed in the US. They just domiciled out of Ireland, and therefore you can buy USD and buy all of these. There's no difference in that. You do not need to buy new currency. You can still buy USD and do this. So VWRA, Vanguard FTSE All World Index, is available here. This does not have estate tax on it. Okay, so the third one is CSNDX. Let's search for CSNDX as well. If we come here and search for CSNDX, we see this iShares NASDAQ 100. This is the one that you have to select. ACC means accumulating, which basically means that the dividends are not going to be passed on to you and they're going to be reinvested. And so that's like growth. But yeah, you can see this, right? CSNDX USD. You can use this to invest in your NASDAQ 100 ones. So it's again available on India INX. So yeah, there we go. I think you should now have a clear understanding of what is estate tax, how is it computed, what is counted under it, what are the different slab rates, how can you compute it? I have that Excel sheet for you. Just put your gross assets and it will show up how much estate tax will you have to pay. What are the different alternate instruments that you can invest in to avoid estate tax? What are the platforms that allow you to do this and don't allow you to do this? So now you'll ask me, hey, are there any disadvantages of investing in these Irish ETFs that I just showed you? No major disadvantages, but I do want to call out two things. One, the expense ratio of these is slightly higher. So for example, the VU, which is the Vanguard expense ratio, is 0.03%, but CSPX is 0.07%. Now it's 2x of VU, but in absolute terms, it's still pretty small, right? It's much smaller than what you would do for a Motilal Oswal NASDAQ 100 fund of fund, where you're losing so much in terms of currency conversions and just like the number of layers there. So I would still prefer this over that. That's one. The second one is that if you're an intraday trader where you have a lot of liquidity, where you need a lot of liquidity and you want to make sure that you're getting the best price and buy-sell spread is as less as possible, then the US ones are better off because they are just a lot more liquid. Having said that, it's not like these Irish ones are any lightweights and have no liquidity. They just have lesser liquidity than the US equivalents. And so that's something for you to consider. And yeah, I think those are the two broad high-level pitfalls that I think. But personally, if you ask me, that estate tax in itself is so prohibitive and so scary that I think these are very small prices to pay if you're able to avoid that altogether. Last question of this is that, hey, I work at a US company. What should I do? What is your recommendation to me? My recommendation to you would be start diversifying. As you hit the 2-year, like this is what I'm going to be doing. I'm not recommending, I'm just sharing what I'm going to be doing, right? And what I have been doing. As my stocks keep vesting, I keep selling them and I keep diversifying them into these ETFs, depending on how I'm feeling about which ETF. But broadly, that's what I keep doing, that I keep selling those, pulling money from US Situs and putting them into non-US Situs asset classes. And yeah, that's broadly what I would recommend you also start doing. The other option you could have is that buy a house, use Section 54F if you don't have more than 2 houses, and use some of those capital gain taxes and buy a house and diversify out of equity altogether. But if you must invest in the US and you want to be exposed to USD and make sure because of all of the benefits I spoke about, then maybe this is a route that you can explore and you can start diversifying your funds into these non-US Citus assets as opposed to the US Citus ones. So that brings us to the end of the video. Like I said, this has huge implications for anybody who's heavily invested in the US markets and can really throw your financial plans away. And so my recommendation and request, again, I do not make this very often, but I would really encourage you and request you to share this with as many people as possible. I also want to give a shout out to a fellow Googler, Kanan, who has actually educated me a lot about this, and he's been trying to create awareness about this, and I'm inspired by him. And so therefore a quick shout out to him as well. Another way in which you can actually tackle this is through a life insurance. So say, for example, your US portfolio is worth 10 crore rupees and you have about 3.5 crores in US estate tax liability that you want. You could think of buying an additional life insurance. Don't do any of this. Don't change anything. Let your stocks be as is. But buy an additional life insurance in your name that if you are to die, this additional 3.5 crore life insurance comes in, which can be used to offset your estate tax. You can use that money to give away your estate tax because life insurance is non-US Citus. So that could be another innovative, alternative way of tackling this if you wish. But obviously, you'll have to pay extra premium for that 3.5 crore life insurance in this example. And so that's a cost that you have to take. So take your own decision. I've laid out 2 scenarios for you in which you can navigate this. One, either you move to Irish domiciled ETFs, the one I showed you, or you could get another life insurance policy in lieu of how much your estate tax liability is, and therefore that can offset it. I also want to briefly cover what are the formalities of paying this estate tax. There is a form called Form 706NE, which is basically for NRAs. Once they pass away, their families have to give this estate tax within 9 months of them passing away. And you can ask for an extension of another 6 months. But the form name is Form 706NA. If there are any other innovative solutions that you have in mind, please do share it with me as well and share in the comments. Hope you found that useful. Please like, comment, subscribe. You know the usuals. Thank you and see you all in the next one. Bye.